Hello, I'm Nick with TradingAnalysis.com and need to ask you an important question, especially men out there over 30. Would you dare let yourself be seen in Crocs, the slip-on shoes? Our fearless founder found himself in the hot seat on CNBC, discussing this pressing issue for middle-aged men everywhere. Todd was being interviewed about Nike and CNBC's Power Lunch following a strong earnings report, but Todd instead made the case for Crocs, a stock he owns. Here's a clip, and after that he'll go into more detail of the technicals and fundamentals behind the stock.
Touch right now.
Okay, let's move on, Todd. Stock number 2 is Nike. Real nice pop off some better than expected earnings, better than lowered expectations, we might add. But what is the longer or medium-term trend like on Nike?
Yeah, hey, Sully. Big beat. EPS was like 33% above consensus, but margins are squished here. Inventories have been increasing, and I don't think Nike has as much pricing power as some of the other retailers as are, I would say, kind of high-end. Technically speaking, the stock is below $118. That's resistance from August. If it can manage to get through that, they have another set of resistance, about 123 from June. Plus, the stock, I think, is expensive. I'm more of a Crocs kind of guy. That's a stock that I own in the growth portfolio. I like that one better.
Before dwelling on that, let's move along, Todd, to the utility. Southern Company.
Thank you. I appreciate you letting me.
Do you like this sector? Feel free to show us your footwear now, by the way.
Thanks for... And yeah, my trading Crocs under there. Yeah, no, I like it. A good rotation.
We believe our Fashion Challenge leader missed Kelly Evans' cue to show the national audience his ugly footwear. So let's do that, and then the stock.
Question for you. Do real men wear Crocs, or do real men not care? I mean, around the house, how do you not have Crocs? Plus, my kids love them. So that's the debate, and a few of our members and clients kind of laugh at me for Crocs. Some men would be caught dead in them. I don't know. I personally, you're over 40, 3 kids, married, who cares? Function over form and fashion. Anyways, I like the stock, Crocs, over Nike. To start, let's compare Nike over Crocs. Now, this is a percent change off of the high in November 21 of the two stocks. And you can see that Crocs has fallen quite sharply into those June lows, but has also recovered quite sharply where Nike has too. The net, round trip from the highs to the highs here, they're pretty similar, right, off of the very highs. And then down here on the weekly, you can see the two are very, very correlated with the exception of this right in here, just off of this decline from November of last year into the June low. So if you look at the percent actual from the low, I think this is where you're going to see the strength in Crocs. So let's go percent change off the low. Crocs bottomed in June, and we're up 121% from the lows. Nike, on the other hand, up 26%. So call it 1/5. Of the move back, and again off the highs we have pretty much a similar decline. So I'm going to show you fundamentals, and then we'll get into the technicals, and I'll show you where I think we might be looking to enter a trade. So using Y charts here, a few key fundamental measures that we like to look at here. So first of all, operating margin. They have a navigated supply chain, especially with all the rubber that's required. They've navigated supply chain and set themselves up quite well, and you can see this coming through in operating margin. So for post 2020, you can see they barely moved on their margins, and here is Crocs in purple up 24% on trailing 12 months operating margin compared to Nike and Skechers. Look on, let's go ROE, return on equity, another key stat that you like to see in terms of management performance. Really strong move there over their competitors. And if you just look at the actual valuations, trading 10 times forward earnings. I mean, if you look at the estimates of where this thing is supposed to be in 23, we're looking at estimated 2022 at $10.32 for 2022. And the estimate was for $8.13. Going into 2023, $10.70, so 40 cents growth off of 1032. So what is that? Call it 4%, somewhere around there, not great. But looking out to 2024, you're going up to $12.16. So that's how you get the multiple there. So if we're only looking for $10.70 divided by 104.62, it seems cheap to me. That's your 10 times forward earnings for 2023 with those kind of margins. Plus, I don't know about you, and I'm going to get the technicals out here, but if you have kids and you've been to a Crocs store, they have all those, I think they're gibbets is what they're called. Good luck. The kids love them. Good luck getting out of there with spending any less than $30 or $40 to attach these things that ultimately will fall off your shoes, and your kids are going to want you to buy more of them. So here's the chart in Crocs. This is the weekly from an Elliott Wave point of view. Let me just flip this over, and now we'll wrap this up. So this is the weekly. There's that 100% move off the low, as I mentioned. We're into the 61% retracement of that November to June move. If we can get through there, we're in a potential third of a third situation, which if we can break through, the 786 is up there, plus some fib multiples off of the internal of the wave count, and that would give you 135 in Crocs. So I hold it in my growth portfolio at the wealth management. I'm looking to do an options trade on the research business. If we can get a little love above the 618 retracement, let me know what you think. Are you a Crocs man? Not? You're not? Wouldn't be caught dead in them? I guess I understand that too. Hey, thanks for listening. We will see you in the next video update. Take care.